Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, February the 1st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, we have had a lot of economic data come out today here and across the pond, and it is actually a leading indicator. It's called the Purchasing Managers Index, and that is the PMI. And the reason why that's a leading indicator is because it's the purchasing managers of the company that is trying to decipher whether or not they need to ramp up production to keep up with economic inputs, whether there's a lot of demand for those products, or if they see a pullback in consumer spending or something along those lines, then they will start to pull back on their production of different products, if you will. And it's a survey of over like 200 different companies. They survey the different purchasing managers of each individual company. Anyway, having said that, across the pond, Spanish PMI was probably the only one that came out a little bit better than expected at 55.4. But the manufacturing side of Swiss was right at 50. And remember, anything above 50 is expansion. Anything below 50 is contraction or looking at recessionary. If you have several of these in a month or several months in a row of these being below 50, that indicates that we are moving into a recession. Anyway, so German manufacturing PMI came in a little bit higher than expected. European final manufacturing PMI came in slightly higher. Great Britain was 52.9, slightly higher than expected. The overall, though, here in the U.S., we had the PMI come in at 52.4, but the ISM, which is the Institute for Supply Management, which is more widely looked at manufacturing PMI, came in at 48.2, which was lower than expected. And keep in mind that 48.2 is another month below 50, starting to signal signs of recession here in the United States. PCE price index was flatlined, so no real inflationary factors going on in there. Construction spending came in lower than expected, and the ISM manufacturing prices was lower than expected. So again, no real inflationary aspects around that number. We also had, or we're going to be having Fed Fisher speaking today, and he's always a pretty interesting cat to talk or listen to his speeches. It always has to do something with sports analogies, but interesting nonetheless. Anyway, the overall market here, as you can see, NASDAQ just pushing into positive territory, up 3 points on the day. It's been in negative territory mostly overnight, but we're starting to push a little bit higher, as you can see here. This is a chart of the E-mini S&Ps, which is negative on the day, and we've been talking about this. On the downside, the NASDAQ was lagging. On the upside, it was starting to lag, but now it's starting to catch up a little bit. So it's pushing higher as the rest of the indices are slightly in negative territory. But down 2 points is unchanged for the most part. As you can see here on the chart, down 2.5 points, almost 3 points for the E-mini S&Ps. And this is, again, the breakdown, a 15-minute chart with the monkey bars and the market profile. Just showing you an intraday value area high and low is a coincidence. The value area high from Friday is lining up with the value area high for today. So nothing really remarkable there other than this high happened overnight, and the market will probably want to go up there and print that during the day session. So look out for that. So we got about 10 more points to the upside, 7 more points to the upside in order to capture that. Onto the trades that I've done. Caterpillar, has been rallying. It's looking pretty good. They beat earnings, but the overall economy with the ISM coming out, the PMI coming out lower than expected. Purchasing managers aren't purchasing as much. Caterpillar is likely in that camp of where the purchasing managers were talked to and asked whether or not they were ramping up production or not. But having said that, this is going to look like a resistance area to me, anywhere above 62.5 to 65. So in this, I got in this a little bit early this morning, and the market has rallied a little bit since I put this on, but the 65 area is definitely looking like the best support resistance area for me. Plus it's lining up with this 50-day moving average. But I did the March 67 and a half call spread and sold it for 77 cents. So I'm looking at it to at least hold support here. If it busts above that, then I really don't want to be in that trade much longer than that. On to Twitter. Twitter, I've had on this position for a while. I had on the February 21 puts. I rolled those into the February 1s as the 21 puts, collected a little bit more premium. So now, keeping that dream alive, I'm rolling that into the Feb 2 with 11 days to go. And I rolled that for a 55-cent credit. The reason why you do that, keeping that dream alive, anything could happen with Twitter. It's been beaten up so bad. The board of directors walked away. They don't have a CEO. As soon as that happens, I think you're going to see a nice big spike in Twitter. So I want to keep that dream going. Losing money in it right now, obviously, because it's below my put strike, but keeping that dream alive, collecting more credits as it goes along, and just watching that theta come out of those, which is the profit in that. So I can keep rolling that out and hopefully get back to break even in that. And if it really pops up, then I will be profitable in that trade. And moving on to Baba. Baba's touched down on this like 3 times right here at this 65 area. So, it's looking like it's going to hold support here. It might get a little bit of a bounce, which is what I'm looking for. They aren't doing too bad. They beat earnings and got slammed on that, which was a bit of a surprise, but it's come down and found support here. You're going to have to look at that there as a support area. I haven't pulled up the Fibonacci on this, but I'm sure that's where a nice line is in the sand for that. So I stepped into this to add a little bit of long deltas in here because I still think that the E-mini S&Ps could have a tendency to want to try and rally up, and the NASDAQ could want to try and go up to the 44.30 area. So we'll have to see. But so I just added a little bit of long deltas on the stock that's been beat up on good earnings. So it did the March 62.5, 60 put spread, and did that for 65 cents. Collected 65 cents for that trade. So I'm hoping that we'll get at least a little bit of bounce up into the 70 areas, and I'll be able to cover that trade. Friday's webinar went off really good. We had several hundred people signed up for it. It was on synthetic short stocks, and I was even asked about synthetic long stocks. And yeah, I'm a person that likes to trade the options, so I rarely go out there and get long or short an actual stock. I use it synthetically through the options chains to create that position. The reason why is because it doesn't take as much margin. For instance, with this BABA, if you bought 100 shares of BABA, it would cost you $6,600. If I was going to synthetically long BABA as through the options chains, it would cost me about $3,000 in margin to create that type of position. And it's going to react the same way in the overall market. If BABA's up $1, I'll gain $1 on that upside. Same thing with the synthetic short stock position. If the market goes down $1 with the underlying, then I'm going to make $1, but I'm using a lot less margin. So it increases my return on capital for my P&L, and it's not such a margin hog in that portfolio. So check that out. You can go to protraderstrategies.com, get that sent to you. That's all I got for you guys today, other than if you can't take that, take it easy.